Welcome to Futures Trader with NinjaTrader. I've been looking forward to this show actually not even just all weekend, since like Thursday. I've been looking forward to this show because I cannot wait to hear what Jim Cagnina has to say about these markets, whether it's stock futures or crude oil futures or currency futures, the Russian ruble. We'll talk about that. Wheat futures. There is so much action in the futures markets right now that I don't know if we'll have time to get to it all in the next half hour, but that is my goal, to get to it all. So let's go ahead, start that intro, smash that like button. This is Futures Trading with NinjaTrader. All right, Jim Cagnina from NinjaTrader. Jim, I would ask how your weekend was, but I have a hunch you strayed too far from the computer.
You're right for sure. I mean, all night last night I was up, all morning this morning I was up, and we are living in such a unique moment in history, for the worse probably, but maybe I don't know, maybe we'll get out of this okay. But it's just such a unique thing. Maybe once in a generation, if you have a 20-year span as a trader, you see something like this, maybe twice, and it's unique for sure.
In what sense though? Like what makes it so unique?
Well, okay, so that all of the markets are behaving in a very systematic way, right? It's systematic risk that's taken over. The stock index futures, they're all marching to the same drummer. All the patterns look the same. Everything, all the reaction is based on what's going on in Russia and Ukraine, right? The gold market, crude oil, the risk-off markets, bonds are 100% negatively correlated at this time. So you see all these different asset classes moving in unison or anti-unison based on this whole systematic risk that we're seeing because of what's going on.
Yep. All right, let's bring up your charts here, Jim, and I guess let's start with the S&P 500, the E-mini futures, and I really, before we even get to today, I would just love to talk about a little bit about last week, about Thursday and Friday specifically. Then we'll get into Sunday and Monday here, but just walk us through the action because, Thursday morning it was Wednesday night, Thursday morning it was straight carnage out there, and then that dip got bought so viciously. I would just love your thoughts here.
Yeah, I mean, this was all right. Let's look at the channel that I drew, right? This channel is about 2 weeks worth of price action. It's negative, it's down, right?
Okay.
And ever since this whole Ukraine situation started, we had a series of down days, series of sellers, no buyers coming in. Everybody's worried, market uncertainty, no one knows what's going on. And then sure enough, Thursday, look at that candle. I know it's green, but look how far down we hit the low. 40.96 on the futures. That was one of the scariest moments ever, right? It's like, wow, we're hitting rock bottom and we're still digging. Well, eventually the market says, no, we've assessed all this information now. We know that there's an invasion, no matter what anybody calls it. And we're going to try to get some kind of equilibrium back into the market based on fundamentals, knowing that this is the bucket we're in right now. So buyers came back in and drove prices more than 50% back up the entire range of the day. Now we still closed on a low. It was still ugly, right? And ironically, it matched up to the bottom of my icicle wick here at the end of January. But that's how these charts work. Sometimes things kind of line up. So and then we just had buyers come back in and say, right now we're gonna rebalance. And then buyers continued to come in. Then on Friday, we almost closed on our highs. Now, on an ordinary Monday, I would say when you close on your highs,
that was remarkable. Friday, like for the stock market session, the 4 p.m. close, we did close at the highs in the indexes, and then the futures market ends a little bit later, and then also closed. I mean, it boggles the mind, Jim, that we could close at the high of the week on a week where Russia invades Ukraine, right?
Yeah, it was, and again, it mystified me at the time too, and it's still kind of mystifying. But it's this balance where the market is balancing itself. And keep in mind also, there was a little bit of a relief component when you look at the Fed funds tool. If I could show it real quick.
Oh yes.
Where we had a paradigm shift backward, right?
Oh, yeah.
So the Fed funds tool tries to predict interest rate hikes, and I'm going to look at the probabilities that it's a mechanical model based on the Fed funds futures. And now we have on the next meeting, which is March 16th, we have a 91% chance of only a 25 basis point hike versus an 8.5% chance of a 50 basis point hike. And before the invasion, it was flip-flopped. It was the opposite. We had a high percentage in the 50 basis points or half percent. And it was the other way around. And so everything has changed. So that's a little bit of it, right? A little bit that, okay, market's like, all right, we're going to be dovish again. Your money's going to flow again. We're going to be good. In addition to juggling this whole idea that, hey, this is what the market thinks of the war.
Yeah. Pretty remarkable. And of course, this action is not limited to the S&P 500. It's also playing out in every major stock index and the Nasdaq and the Russell. The charts look identical for the moment. But let's talk about this morning, the overnight action here and then this morning, Jim, because it's deja vu all over again.
Yeah, I'm just going to toggle to a 10-minute chart really fast. Yeah. And I'm just going to pull up an S&P futures chart. And give me a second here to kind of format it a little bit better for our viewers. And look at this gap last night, right? So we closed up, previous session, the end of the futures market, which, as you pointed out, Spencer, is an hour longer. And then we opened Sunday night with this giant gap, right? Giant gap. Sellers just came in, pounded this thing all the way down, and we didn't find a bottom here until about 42.67. It was a huge move down. It has simulated all of this uncertainty and information overload that what you got in the weekend when the markets were closed. And finally, kind of cooler heads have slowly prevailed. The information, the meetings were held between Ukraine officials and Russian officials, and all a bunch of different countries have kind of declared their position and what they're going to do with sanctions. And so this uncertainty is starting to slowly creep out, and we had buyers come back in today.
Pretty remarkable stuff.
It is remarkable. My fib line's all messed up, and we're still. It was here when I started getting prepared for the event. Now we're 43.69.
I just would love to know, Jim, and we will eventually move on here to other markets and look at other charts. But how are you trading this? How are you approaching this?
Well, yeah, it's a good. It's pretty much been thinking about what our bias is and then reacting. The problem is our bias is opposite of what we want to do. So when I looked at an intraday chart this morning, and we did a lot of this in our early morning sessions, we were looking for places in the stock index futures, maybe places to buy on dips, on crude oil and gold and bonds, places to sell on rallies, and try to take advantage of that natural volatility, given that I don't want to use the word correction because people use it differently, but given that this balance is starting to reoccur.
Wow. All right, let's move on here. There's other charts to look at, Jim, outside the S&P, although that seems to be your leader.
No, yeah, we'll move over. For Nasdaq and the Dow, systematically the charts look the same, right? It's a systematic move, and they look pretty identical or pretty close to identical. Let's just hop over to gold as an example.
Okay.
Here's a gold chart, right? And this is a classic scenario of risk off. I'm throwing my money into gold until this thing settles down, and totally inversely related to equity prices. And here we go. This was that Thursday. Look at that wick. We made a high, Spencer. It was at 1976. That was, people were freaked. This was the freak out bar. And finally cooler heads kind of settled down a little bit. But right now I'm bullish on gold. I think this is the market to look at. One of the markets to look at when gauging coming up with the idea, what's going to happen in equity prices today, or is happening now, or later on this afternoon. We're seeing a little bit of a break back down toward the 38.2% retracement around the 1900 level. We'll see if that continues or not. It's kind of still very high and a little scary on gold. So this is finally gold's doing what it's supposed to do.
What do you make of the fact that both the charts we've looked at today, the S&P and the gold charts have had these same types of blow off candles in opposite directions, mind you, but the same type of like candle where you get like a whoosh down or a whoosh up, and then it comes back down to earth, or it comes back up to earth. What do you make of that? Is that just the market? Like, is that just the market digesting things and giving things time to shake out, or like an overreaction right off the open, or because it doesn't seem normal to me?
Yeah, and I mean this wild volatility, and again, because we're living in this is such an interesting time, any amount of news is either going to give us comfort or freak us out, and it causes this overreaction, short-term overreaction in the markets, creating crazy volatility. With social media fueling the fire, right? Everyone's looking at Twitter and Reddit and all these things. You get all sorts of bad information. So a lot of times the dust does settle, and people should be patient and keep their head about them. But this is what happens, and this is the exact phenomenon, man. It was crazy. People were freaked. This thing could have, we have a situation here. Not only is it unique, but one of the instigators here has their pulse on nuclear weapons, and that makes it much more scary.
Yep. Yeah, we are sort of at the mercy of the headlines, although it seems like give it a few hours after the market open and everything is more or less cool, is what the market would. That's what the market would seem to be telling you, but even though we know that's not necessarily the case, it feels that way, right? Because how else do you interpret the fact that I mean, gold is, outside of that big wick, it come off those highs, and the fact that the stock market has come back and Nasdaq is green today. So I don't know.
Yeah,
man.
no, for sure. I mean, if take a look at crude oil, we've been in this bullish channel for a long time, and it's supply and demand market. OPEC Plus is recently today said, hey, we're going to stick with our 400 million barrel march. We don't. What's going on? There's nothing going on here. We're going to keep it going, and Russia's part of OPEC Plus. But again, you see these big wicks, right? This was today, Friday, Thursday, huge wick all the way up to 100, over 100 in WTI crude, and then again, once the dust settled, it pushed us back down to almost unchanged on the day. But we're still in a bull market here, and it's still, Russia does export a ton of crude oil. It's very unclear if there's going to be sanctions on that or if there's not going to be sanctions on that. The whole energy market, global energy market is interconnected. So it matters, that part of the equation matters on crude. We do know the rig counts maybe in the Permian Basin are kicking up here in the U.S., but if you turn on a rig today, it's 9 to 12 months before you're getting production out of it. So it's going to be a delayed effect. I'm going to definitely be bullish here, and we'll see. And there'll be a point where there's demand depletion, right?
Well, there could also be a supply shift, a policy shift, right? Like the U.S. is going to release their reserves, or so they've indicated. So that would seem to mean that the supply of oil is going to increase, which could weigh on that.
Yeah, but keep in mind, so far the reserves that are going to be released that have been agreed upon between U.S. and a couple of other countries amount to about a half a day OPEC production. So that's not the final answer, because this is just simply not going to be enough in the long run, no matter how much they release. So, but I hear you. I mean, everyone's scrambling right now, but we'll see. More sanctions. If sanctions include energy products, then this is gonna rally substantively.
But you're still bullish oil. So like what does that mean? Looking to buy dips as we get to the bottom of that trend?
Yeah, for sure. And it's still a supply and demand market, right? And I think demand is still pretty high. They're saying, well, there'll be this demand suppression around $120 in WTI. It's kind of what the experts are saying. That may or may not be true, which gives us about a 20% premium here before we get there. And production it's going to take a while to kick in, regardless of what happens in Russia, right? So that's why I'm bullish right now.
All right. So do we have a target here, or levels, or potential trade set up, or are we just? I mean, I see you've got the Fibonacci levels there on the screen, which you always have. But is there a specific trade here, or what?
Yeah, no, I mean, right now, low 90s, we get close to that 23.6%, low 90s would be a target to go long, maybe. And I do respect this fib. I do respect this wick here. A lot of times these wicks get challenged in the future. So when you see a wick or a shadow, if you want to call it that, depending on where you studied your candles, your Japanese candles, is 100 or higher. So I think buying the 90s, selling the hundreds, I think is would be ideal if that opportunity arises.
Okay. Jim, let's move away. No, actually, let's stick with commodities for 1 second, then we'll move away, go to the currencies. But sure, 30-year Treasury bonds. Let's take a look. How are we looking?
So again, I'm bearish overall because of the whole Fed phenomenon. But again, this is kind of we see a gap up today. Bonds are traded over 156 handle. And I think that's a phenomenon of risk off, flight to quality, U.S. Treasuries. Let's be there just in case. I expect that to taper and turn around as the equity market appreciates, if it does. So, this particular case, I am bearish here, but not today. We're going to wait and see what happens, and then tomorrow think about where's a good place to sell.
Okay. All right. What about wheat? Or no, we didn't even do Bitcoin yet, but I don't know. Jim, lead us here.
All right, let's do Bitcoin. Bitcoin, surprising rally today. I mean, Bitcoin's been the anti-gold in my mind. It's been inversely related to gold, and I have some theories on why, but I'm not sure because this is a different marketplace. But people have less cash now. Their portfolios are smaller. They don't want to take a realized gain maybe, so they're holding out. So there's a little bit less cash to throw around in here. But today we saw a really pretty big candle here. Buyers are coming back in, and if we close above my area support and resistance here at 48.80, and this is the futures contract, then all bets are off. We'll see if we can have continued buying here. So I was surprised at this candle for sure today.
What about wheat here? Because we know
we got to go to wheat. We got to talk about wheat.
We know that Ukraine is a major exporter of the global wheat supply, and the wheat market, you can see, is trying to make sense of this whole thing.
Yeah, I mean, look at it. I mean, look again, that wick from a couple of days ago, all the way up to 960. I can't remember the last time we had wheat prices this high. It's maybe not an all-time high, but it's substantively higher than average, and you could see, when this whole notion of invasion popped in, market anticipated maybe this wheat supply is going to get cut off or prices are going to change, and sure enough, it rallied like crazy. And right now, we're still not out of the woods here. There still could be sanctions, and if there are sanctions on wheat, maybe there are as we're speaking. I don't know. Things are moving so fast. We could see even higher prices. So this is an amazing looking chart.
How do you even try to go about trading? Because obviously people are playing ball here, Jim. People are trading wheat because it's not every day wheat makes a move like that. So how do you even consider going about trying to trade a chart that looks as crazy as this one?
Yeah, I mean, I think, in my opinion anyway, my advice is wait until either an obvious area of resistance develops on the chart or an obvious area of support develops on the chart, and then you could trade it. But right now with these giant, unless you're a commercial hedger or somebody like that in the business, I would be careful of trying to speculate right now because this is going to be very sensitive.
unless you have to trade it, don't trade it. Is what you're saying.
Yeah, I think so. I mean, I would kind of be, when you see behavior like in December all the way through to March, these are really nice tradable, swings.
Sure.
Swing high, low, high, low, high, low. These are really nice. And they're in a range. It's nothing crazy, between 760 and 820. When you see a breakout like this with no end in sight, even though we have a couple, looks like bars, selling bars, be careful.
Yeah. Okay, should we move on to the currency situation? Should we move on to the ruble?
We got to show the ruble.
We got to show the ruble.
This is the Russian ruble. I mean, sell-off started, in the 17th. Sellers. At this point, the invasion's imminent, if not already started. Sellers came in hard and created this wick, this candle right here. At that point, I thought, okay, that's it. It can't get any worse than this. It can't get any worse than this. And we ended up with this again, a big gap last night on the open. And look at this. We had sellers come all the way down. It almost looks like it's going to zero, but it's kind of settled in here. I do believe the Russian central bank doubled their prime rate to kind of help stabilize this a little bit.
20%, from 10 to 20%.
Yeah. And it might have worked a little bit. But if you're looking to buy ruble right now, I probably would take a pass.
So wait, just to clarify here for people that don't understand. So obviously you can trade currencies, right? On the Forex market, you can trade the ruble against the dollar against the pound, yen, all the currencies. Mm-hmm. But there are also futures markets for currencies, correct?
Yeah, and in this case, it's the currency crosses the Russian ruble versus the U.S. dollar,
right.
And it's a futures market. It's traded on a centralized exchange at the CME Group. It's great trading through NinjaTrader, and it gives you kind of a transparent feel, right? It's not, there's no third party involved, so that's kind of a nice thing to consider when you're trading currency futures in general. And there's a lot of other benefits that we don't have time to talk about, but. I mean, you could day trade, you could position trade, you could participate and express your opinion here. My opinion is I'm not buying rubles right now. I'm not buying this cross.
Yeah. Well, the thing that always kind of annoyed me about Forex markets is that the ranges are so small. Typically, a big move in Forex land is a tiny move for other markets, so it is very rare. I think the last time I really remember seeing a Forex chart that looked like this was the night of Brexit when everything went haywire. You very seldom see Forex pairs look like that.
Yeah. Crazy.
It just shows you the time that we're in right now. All right.
Yeah, even the dollar index, real fast. This is the U.S. dollar index. We definitely, we were range bound in December, in January, and then all of a sudden we had a spike here in the U.S. dollar index. Things are starting to settle back down here. So again, even to your point, at the end of the day, this is even going to have a regular range pretty soon as well.
And this is the confusing part, Jim. Is it's unknown what the implications or the domino effect of all of this, across the global economy. How does the ruble crashing affect the power of the dollar or other currencies? And now, especially now that Russians are basically they can't transact in U.S. dollars for the moment. How does a disruption to the global wheat supply chain impact other commodities? And all these things are unknown, and that creates some hesitancy. It has to, right?
Surely. Yeah.
Surely. So
for sure.
So do you have? I would be very curious to hear what your tip of the week is here, because as we said, once in a every few years type of market. Mm-hmm. So what? Let's get to your tip of the week right now. Is that cool?
Yeah.
All right. Let's do that. What do we got?
All right. Spencer, the tip of the week is this: sell the rumor, buy the fact. Use caution with distribution of fast feed news and information. I was just totally confused. And this weekend, looking at Twitter, Reddit, the regular news shows on TV, even Bloomberg and Reuters, so many experts saying so many different things. It's what's really going on, we probably don't know. And we're going to get information that's fed to us eventually through, and I hate to say it, through press briefings and stuff like that. So just be careful with that and don't overreact when you see a really sensational piece of information that from a source that you don't know.
Yeah. I mean, I can just like, as someone that, works in quote unquote in media, right? And I like to think of myself as like pretty media literate. It is still very difficult for me to parse through the noise and understand, okay, like what I try to think of it as like, okay, what are the things that are gonna be talked about years from now? Like, what are the moments in this conflict that are actually gonna matter in the long term? Like, there's just so much noise, and some of that is valuable noise, and some like firsthand accounts is valuable, but some of it isn't. It's just it's minutia, right? And it's very difficult to parse through all of it and figure out, okay, what actually.
Yeah, but this morning I saw, peace talks canceled, and then the next headline said peace talks underway, and
Right.
the next one said they failed. The next one said they succeeded. The next one said they retired for the evening. Well,
yeah,
it doesn't help.
So the main thing, and this is mostly just a social media specific issue here, but the main thing I want to caution everyone is what Jim just said. Unless you actually see something, whether it's a quote or a development or a fact or whatever, and you see it from the source itself, then treat it with skepticism. Honestly, if you see one Twitter account that has 100,000 followers citing another Twitter account who's citing this other anonymous source, like the longer that chain goes, the more likely it is to get screwed up, right? So try to find the source of things, and it's hard on social media. It's very difficult. You get a lot of attributions to anonymous government officials, and it creates this game of telephone, right? Where things get lost.
Not only that, I mean, people retweet things that they think
yes
is true. I mean, they honestly believe this is true. They retweet it, and it's not. I saw a thing that said, U.S. government official says blah, blah, blah. And then when I clicked on the report, it wasn't the official who said it. It was a guy who works for the Rand Corporation, which is a subcontractor. And I'm like, well, the headline's misleading.
Yep.
So, sorry.
Anyway, so guys, any questions for Jim Cagnina? Now is your time to ask. Jim is, of course, a senior education and training specialist for the NinjaTrader platform. Jim, do we have any trades on right now?
We had a bunch on this morning. I think they're all cleared out right now. Let me just take a quick peek. And again, we were doing the recovery trade. So we're short bonds right now is the only thing that's going on. We can take a peek at what that chart looks like really quickly. Again, this isn't a real-time sim account. And the point of control is pretty high, but we did get short here at 156, and we're about 4 ticks into it. And remember, one contract in a U.S. Treasury bond future is worth $31.25. So you multiply that times 5 now. We just had another one. My target's down here. Again, I am bearish and overall on bonds. So I was looking for a place to sell up toward the top of, where the point of control was at the time, between the 61.8, right below the 61.8. And so I got short there with a stop just right above here. We had that crazy wick again last night, way up here, very little volume. Buyers brought the price all the way up on that opening 2 bars, settled back down. So it looked like a good opportunity.
Okay, a few questions here. This is interesting from Young Money. Do you think Russia's buying up the Bitcoin? I don't know. It's possible. Anything's possible at this point. Jim, would you buy Bitcoin futures now? Let's go to that chart.
I'll go to the chart. Yeah, hang on a second, guys. My answer is probably going to be no, only because I'm still scratching my head about it. But it's looking strong. Somebody's buying them for sure, because this is a pretty big green candle here coming in. A lot of buyers are coming in. And remember, I had my 3 shelves. This was support, resistance, support, resistance, support, resistance. So we got a long way to go before we break up here to 45,650 on the futures. I'd like to see it close right above here, right above the 4880, which looks like where we're headed. And in that case, then I'd be more open-minded to actually buying Bitcoin if we can close up here so far. Long way to go today. Anything could happen. It's only 11:30.
And yes, good point out, Happy. The S&P 500 futures just ticked green following the path of the Nasdaq and the Russell. Dow still in the red. And then the question from Anissa on what position should we take on wheat. I think what Jim said earlier, Anissa, is I don't know, very difficult.
Yeah. So I mean, I think in my opinion is this: until the sanction picture is solved. In other words, are there going to be any constraints with respect to exporting wheat futures from Russia? And if so, what are those constraints? They just don't go to the U.S., or they can go to China. So there's going to be subtleties in what the sanctions, if any, there are. And for all I know, someone tweeted that they've just been put in place. So I would wait to get some sort of official word one way or the other. Otherwise, it's very speculative and very dangerous either way.
Yeah. All right. Jim Cagnina joins us every single Monday for a half hour to talk through the futures markets. And as you said before we hopped on here, Jim, it's been a pretty historic week, and I would imagine would continue to be so until we get some more clarity on the situation on the ground. Frankly, while we were on, Jim, the peace talks have since ended, and both parties have gone back to their respective capitals and are talking it over there. So between the issues and the problems in the Ukraine, between what it means for the Federal Reserve, there are just so many unknowns in the air, and it makes things very difficult, but it makes things interesting as well. If there is a silver lining, I suppose that's it. Yeah. But do you have any final thoughts for us, Jim, as we wrap it up here?
Not really. I am going to focus on this daily chart, though, on the ES as we get through the day. Right now, it looks like we're driving toward having a higher high. And the higher the high, I think the more positive that would be with respect to not only the stock index future prices, but the interpretation of what's going on in the world. So we have a higher low, and then a higher high, and it looks like a higher high now. I'd like to see even more of a higher high by the end of the day. And the markets are going to tell us more than Twitter is going to tell us. So that'll be a good thing.
Okay. All right, guys, if you want to learn more about futures trading, check out the various links in the description of this video. There are links to sessions, to webinars that Jim hosts, links to open an account at NinjaTrader. Again, the platform that specializes in futures trading. That's why we do this show with them and with Jim. So check out those links. And Jim, I guess all I can say is keep your eyes on the screen, ear to the ground, and we'll talk again next week. And hopefully by then we have some clarity on things in the market.
Yeah, and I do want to add one last thing if I got a quick second.
Yeah.
So we do our morning event every morning. We've added an afternoon close on the trade event starting today. So if you can make it over to the website, you'll see the links for that.
All right, and it's NinjaTrader.com/platform training, right?
Yeah.
Okay, there it is. All right, Jim. That sound of the drill means it's time to go. So
right.
Let's hop off here. Have a great rest of the day. Have a great week. We'll talk to you again on Monday.
You too. Thanks, Spencer.
All right, and I got to hop as well because it is time for Benzing Live with myself and Aaron Bree. So the stream will end. Redirect to that. Go ahead and smash that like button, and I'll see you guys over on our next show, which is starting right now. Now.